So lesson 13, trading strategies. Trading strategies I divided into two categories. One is for long-term strategies, whereby you will use technical indicator or use technical analysis to buy and hold some good quality stocks. Okay, so that's long-term strategies. And then I will also have this short-term strategies, whereby short-term strategies are more on trading. Okay, trading. So basically, I divided into long-term investors strategies and short-term trading strategies for speculative play. Okay. So first, let's take a look at the time frame. Okay, when we invest in the stock market, when we look at the technical indicator, right? A lot of time we need to know what time frame to use in order to analyze the chart. Usually, the chart that you get from the free source from the internet, like Chartnexus and investing.com, these places they only give you I think they only give you daily chart. Okay, if I'm not mistaken, they only give you daily chart. So you cannot see the lower time frame. The lower time frame will be breaking down into hourly and minutes and even seconds. Okay, so these are the lower time frame. So the lower time frame that I have it here are actually from Bursa Station. Okay, Bursa Station give me 1 minute, 5 minutes, 10 minutes, 15 minutes, and 30 minutes. So will be lower time frame will be in minutes. And in some they even have seconds. Okay, so depends on the software. Then the higher time frame will be hours, days, and week, or even month. Okay, so it could be 1 hour, 2 hours, 4 hours, then 1 day, 1 week, and 1 month, by monthly lah. Okay, by month. So these are the time frame. So depending on what you want to trade. So for example, if you want to trade long term, then probably you will look at the monthly chart and the weekly chart first. Okay, you look at the monthly chart and weekly chart first, and then you look at the daily chart. Do you need to look at the hourly and the minute chart? No need. For long-term investing, long-term investing strategy, no need to look at the hourly or the minute chart. You can look at the daily, the weekly, and the monthly. Okay, so that's long-term. However, for a trading, like a speculative play, you will look at the minute chart, hourly chart, or daily chart. But I usually start with all analysis with the weekly chart first, even if I were to do some trading. Okay, if I were to do trading, short-term trading, I will look at the weekly chart first because I want to see the big overall view. Then only I look at the daily, I look at the hourly, and then I look at the minute. Okay, my favorite is 30-minute chart. 30-minute chart and 4 hours chart. Okay, so it depends on the situation. So you just have to find your favorite time frame and then you trade consistently. Okay, so that is my experience. Okay, then let's take a look at the long-term strategies. The long-term strategies, we will look at 3 indicators. We rely on the indicators. That means before you come up with the indicators, you must have your watch list. Okay, I will have to stress the importance of having a watch list. A watch list is when you use your fundamental analysis to identify the stocks that you want to buy first. Okay, the fundamental you can get from the i3 Investors, the internet, the Stock Hunter. The Stock Hunter is a mobile app whereby they have already calculated those PE ratio and all the fundamentals ratio. And even on the websites, you have Bloomberg, you have investing.com, you have Bursa Station. No, sorry, it's called Bursa Marketplace. Okay, Bursa Marketplace. So these are the places whereby you can get the fundamentals. Okay, they have all the reports there, analyst reports. So you just need to read those analyst report and understand the industry, and then based on those recommendation, and then of course you have to read from various sources. You cannot rely on one source. So you have to read all sources, and then sometimes I even read the forum in the i3 Investors to see what they are talking about. So these are the places where you gather information, and then you analyze, and then you come up with a stock list, okay, your watch list. And your watch list, in my portfolio management, right, I would ask you how to divide into sectors, okay? It's based on the sectors. Then only after you have the sectors, then you will put in the stocks, the best stocks in each of the sectors, and then then that will be your watch list. And then you find the right timing to enter. Or another strategy is that besides all these long-term strategies, technical analysis strategy, you can use time as a strategy. That means you don't look at the price anymore, you look at the timing. So actually for diversification, a lot of people they like to talk about price diversification. That means they want to lower cost the average. For example, you bought the Maybank at 750, okay? Then if let's say the Maybank went down to 7, then you will lower cost. Okay, went down to 6, you will lower cost again. So that means whenever you keep buying, right, then you will have to keep lower cost your average. So this is, you are actually focusing on the price. Okay, you're focusing on the price, and then you want to get the average cost, lower your average cost. Okay, so the keyword here is the price. So now I have another strategy whereby you don't look at the price here. Okay, you don't look at the price, you look at the time. You already identified the stock already. Okay, you already identified the stock is a Maybank. So then you don't look at the price already, because you know that I just want to buy and hold for long term. I'm not going to sell it, so I'm just going to collect the dividends. So if that is your objective, okay, so that means if you're not selling it, the price is not a matter, doesn't matter to you anymore, since you're not selling it. Then you look for the time when you want to buy. Okay, so you buy on a time base. So for example, you will choose every 3 months. Okay, every 3 months to invest, and then the 3 months will be these are the months that usually that will be February. Okay, February, and then May, August, and November. Okay, so plus or minus 1 month. So the bottom may not be these months, maybe plus or minus. So if August you didn't see bottom, maybe September you see a bottom, something like that. Okay, so every 3 months you will enter, and then you choose maybe month end to the first week of every month. Okay, so you choose, then you enter, and then you enter on a consistent basis. So if let's say September you enter already, right, the next calendar date will be September, October, November, December, then you enter again. Okay, the next one will be March, you enter again. Okay, so in that sense, you are actually, you don't care about the price, you just want to enter is because you want to get the diversification in terms of the time diversification rather than price diversification. Okay, you invest over the time is because with the different time frame, maybe sometimes you can get higher price, sometimes you can get lower price, but on average you also do the averaging cost. You also achieve the purpose of averaging your cost because you enter at a different time frame, so you enter at a different price level, and also you got a average out your costs as well. Okay, so this is the approach when you go for long term. Okay, long term. So you need to understand that what is your objective. My objective is dividend, let's say. Then you have to make sure you find a stock that is very consistent in giving dividend. Then you buy, and then sometimes you don't need to buy one only, right? Then you have a few sectors, and then you select the few sectors you want to focus, because there are 12 sectors in Busan, Malaysia, 12 or 13. You can't possibly buy all the 13 sector stocks. So therefore, you choose 3 only. You choose 3, and then you focus on the best 3 sectors to you, the best 3 sectors, and then you focus on these 3 sectors, and then make sure you keep your knowledge well in terms of their happening, the news and info, whatever. Then you choose the best among these sectors. You choose the best, or in terms of the dividends that give you the best dividends. Okay, so let's continue. So this is before we even go into technical, that was the fundamental approach. Okay, that was a fundamental approach. You get your watch list first. After you got your watch list, then only you consider. Okay, so the first strategy is so this is value investing. Okay, before I go into strategies, let me explain value investing. Value investing is to buy and hold. Okay, basically you just need to buy and hold. Like Warren Buffett. Warren Buffett, he likes to buy and hold, but recently you can see that he did do some sectors rotation. That means he used to like the airline industry, but this year he sold all his airline company because he found that these sectors is no longer profitable under the COVID environment. The environment has changed, so then it makes the airline industry very challenging. So he sold all the airline industry, airline stocks. And so sometimes when you say value investing, buy and hold, right? If fundamental have changed, if the fundamentals have changed, you need to make some changes too in your approach. You cannot stick to your old principle. Okay, you need to change as well according to the investing environment. So therefore, value investing is very much on fundamental. So that means you buy and sell, right? It's based on fundamental reason. So you sell your airline stock is also based on fundamental reason. Okay. So I would say that if you are value investing, 80% in the fundamentals, okay, and only 20% in technical analysis. Even if you don't look at the technical analysis, it's fine because you are buying in the fundamentals. Okay, because short term, definitely the price will fluctuate up and down. Okay, definitely, but over the long term, the price supposed to stabilize, and the fundamental will drive the price stability. Okay, if you're buying into a good fundamental stocks, then most likely the price will be stable. Okay, stabilize. Then construct a watch list for your fundamental stock. So that's why I say you must have, for example, your 3 sectors will be banking stocks, technology stocks, and then another one will be whatever, okay, properties, REITs, healthcare, plantation, whatever. But the main one usually I would see that is banking and technology. Okay, and then another one is your additional one. It could be healthcare, it could be others. Okay, so you must have 3, at least 3. Okay, at least 3, because you cannot have too many also. Like if you have like 10, that will be too much for you to. You are not the fund manager yourself, so you do not have the time. Even the fund manager, they have their analysts, a team of the analysts to help them to monitor each sectors. Okay, then choose stocks based on the sectors. So so this is what I said, right? The sectors is important. So you choose the sectors first, and then you choose the stocks. Then you use the TA to time the entry and the exit. Okay.